Welcome to this explainer. When we usually look at global conflicts, our attention gets instantly pulled to the front lines, right? The immediate parties, the daily headlines, the whole shebang. But if you look just a little bit beneath the surface of the data and you follow the money, it reveals a completely different story. Today, we're unpacking a really fascinating geopolitical puzzle from our sources, how global conflicts often have these massive, hidden economic beneficiaries. Let's get into it.
Eleanor Roosevelt actually had this famous quote, "No one won the last war and no one will win the next war." But, looking at the unfolding economic realities of the current Iran conflict, it kind of seems like someone forgot to remind the global markets of that. Because right now, two massive non-combatant powers, Russia and China, are quietly coming out way ahead. And they're literally doing it without even getting directly involved in the fighting.
Okay, let's dive into this. We're going to break this down into 5 parts. First, the unlikely winners. Then, Russia's economic lifeline. Third, China's strategic shortcut. Fourth, the hidden costs. And finally, the peace problem. Starting with part 1, the unlikely winners and their differing motivations. To really grasp what's happening here, we have to view these countries purely as rational economic actors. And man, the contrast is stark. You've got Russia, a country that is basically fighting just to survive. They are scrounging for time, for money, and frankly for global indifference just to stave off total economic collapse under the weight of some absolutely historic sanctions. But then, on the flip side, you have China. China isn't drowning at all. They're accelerating. They are actively capitalizing on the chaos to fast-track their own long-standing goals of global economic dominance. So 2 completely different motivations being fed by the exact same conflict.
Moving on to part 2, Russia's economic lifeline and how they're surviving the sanctions.
Now, to understand why Moscow is quietly breathing a sigh of relief over the economic fallout of the Iran conflict, we gotta look at just how bad things were for them before it even started. Before this, Russia was actually the most heavily sanctioned country on the planet, literally taking that title from Iran. The economic suffocation was intense. Their central bank had to hike interest rates up over 15% just to fight off severe inflation. Everyday products were getting super scarce because their access to Western financial markets and high-end tech was just totally severed. And honestly, perhaps the most devastating blow, they were dealing with the generational labor loss. Hundreds of thousands of young, productive men were pulled out of the workforce right at the start of their careers. So yeah, they desperately needed a lifeline.
And, a lifeline is exactly what they got. Think of Russia as having 3 main pillars keeping its economy afloat right now: immense resource wealth, agricultural self-sufficiency, and a strategic trade network, mostly with China through the BRICS coalition. And the Iran conflict, it basically put all 3 of these pillars on steroids. Because of the supply disruptions in the Gulf, global oil prices spiked. We're talking jumps of up to $30 a barrel. So even though Russia sells its oil at a heavy discount to get around those sanctions, that massive bump in the global baseline means they are suddenly pulling in way more revenue than they were just half a year ago.
But wait, you might be wondering, how are they even selling this oil if they're supposedly cut off from the world? Well, that brings us to the super opaque, kind of shady mechanics of gray market oil laundering. It works like a giant shell game. Step 1. Russian crude gets quietly shipped over to intermediary nations, think places like India or Turkey. Step 2. It gets refined there or just physically mixed in with local oil. And finally, step 3. It's re-exported out to Europe or Asia. By the time that oil reaches the final buyer, its Russian origin has been completely scrubbed. It basically gives Western buyers the plausible deniability they need to keep their own lights on during an energy crunch, all without technically violating their own sanctions.
The leverage doesn't just stop at oil and gas, though. It bleeds right into the global food supply. See, natural gas is a massive ingredient for making ammonia-based fertilizers. Without affordable fertilizer, crop yields absolutely crash, and then food prices skyrocket. So when the Iran conflict disrupted oil and gas, it triggered a global fertilizer shortage. And since Russia is an agricultural powerhouse, this hands them an incredible amount of strategic leverage over food-insecure nations across Africa, South Asia, and the Middle East. Basically, these nations now have to pick up the phone and deal with Moscow, because the alternative is mass starvation and political collapse. But you know what? The most valuable asset this conflict has handed Russia might actually be what our sources call the indifference factor. Think about it. Global media, diplomatic focus, military resources, they've all aggressively shifted away from Ukraine and pivoted straight toward the Middle East. This effectively buys Moscow the one thing it could never print or drill for: time. It gives them the breathing room to stabilize their economy and really cement these new gray market trade relationships.
Which brings us to Section 3, China's strategic shortcut, and how they are thriving in chaos. So while Russia is just trying to survive, China is absolutely looking to thrive. Now they have their own serious domestic headaches, massive US trade tariffs, a really struggling property market weighed down by the debt of giants like Evergrande. But even with all that, Beijing sees a massive golden opportunity here. To really get China's master plan, we need to quickly define the petrodollar. Since the 1970s, almost all of the world's oil has been priced and traded exclusively in US dollars. This setup creates this permanent, massive global demand for US currency. It lets America borrow money on the cheap and wield massive geopolitical power, essentially because they control the world's main payment infrastructure.
Now here is where it gets super interesting. China is actively chipping away at that exact system. Recently, it was announced that the blockade of the Strait of Hormuz would be relaxed, specifically for ships that are transacting their oil in Chinese RMB instead of dollars. Wow. That is a massive warning shot. By stepping up and offering the RMB as a safe alternative to countries who might be afraid of US financial weaponization, China is actively reducing that structural demand for the US dollar and shoving its own currency into the global spotlight. And it ties so perfectly into their broader industrial strategy. China's market dominance in renewables is just staggering. They control 80% of the world's solar panel production and 75% of all lithium-ion batteries. So let's think about this. When global oil prices spike because of conflict in the Middle East, what happens? Suddenly, every country on Earth is financially incentivized to speed up their transition to green energy. And who exactly do they have to buy all those solar panels and batteries from? Yep, China. The conflict is organically funneling billions of dollars straight into China's undisputed monopoly on the future of energy.
And beyond just a pure economics, there's a huge diplomatic win for them here too. China is essentially fast-tracking its reputation. While other superpowers are totally bogged down in the fighting or footing the bill for it, China is swooping in and positioning itself as a stable, predictable mediator. They get to look like the responsible adult in the room. Normally, building that kind of deep global trust takes decades, but this current crisis, it's giving Beijing a massive shortcut.
All right, moving to part 4, the hidden costs and the complications in this whole strategy.
Because of course, none of this comes for free, right? We definitely need a reality check here because, for China especially, these strategic advantages are piling up next to some very heavy burdens. First off, energy dependency. Since China is basically the workshop of the world, they are the largest net importer of oil and natural gas. So right now they're actually being forced to pay massive premiums, sometimes twice as much, just to keep the lights on in their factories. Second, those currency limitations. The RMB might be gaining some traction, but it still lacks transparency, it lacks the rule of law, and it has super strict capital controls. That means a lot of countries simply don't want to hold on to it voluntarily. And third, their domestic economy is still dragging along with really low consumer confidence.
On top of all those economic headwinds, Beijing is facing an absolute diplomatic nightmare. They have spent years and years building up the BRICS coalition as this big alternative to the West. But guess what? BRICS now includes both Iran and the Gulf states like Saudi Arabia and the UAE, which are the exact countries Iran is actively clashing with. I mean, you just can't maintain a credible economic coalition when your member states are practically blowing each other up. China is trying so incredibly hard not to pick a side, but that balancing act is getting exponentially harder by the day.
And that brings us to our final section, Part 5, the peace problem and the structural disincentive. So, bringing all these threads together, we kind of have to ask a fairly cynical question. Do either of these powerhouse nations actually want this conflict to end? The breakdown from the sources is pretty stark. Russia is highly disincentivized to push for peace. If things resolve swiftly, oil prices drop and the globe's attention snaps right back to what they're doing in Ukraine. They literally need this distraction to continue. Now, China's stance is a bit more nuanced. Sure, they want lower oil prices to power their massive manufacturing sector, and they would absolutely love the clout of brokering a peace deal themselves. But structurally, they are massively benefiting from the chaos, the accelerated push for green tech, and the direct hits to the petrodollar.
Which leaves us with this pretty uncomfortable reality, drawn straight from the analysis in our sources. Both of these countries are, at the end of the day, rational economic actors. They aren't making these massive geopolitical decisions based on abstract principles of global peace and harmony. They are looking strictly at their own economic survival and acceleration. So, the nations that actually have the greatest theoretical leverage to force a resolution are exactly the ones quietly profiting from the ongoing chaos.
Which ultimately leaves us with a deeply provocative question to chew on. If the ultimate power brokers on the global stage have little to no real economic incentive to stop the conflict, how does it ever truly end? It's a massive, systemic puzzle, and honestly, understanding the money behind it really changes how you read every single headline. Thank you so much for joining me for this explainer. Keep asking those hard questions, and we'll see you next time.